If you're waiting for 5% rates, you could be making an enormous mistake. I'll explain next. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team about what realistic rates are going to be through the end of this year and into 2026, just click on the link in the comment. Waiting for 5% rates could be a horrendous mistake on your part. And I'll tell you why. Kevin O'Leary, Mr. Wonderful, you probably know him from Shark Tank. He was asked about this and he tackled the question, and his answer was very simple. No, rates aren't going back there anytime soon, if ever. If you look at the average 30-year fixed rate, since they started recording these, it's in the 7.5% range. So there is some historical relevance here. And what he's been saying is the same thing that a lot of experts have been saying. I'll give you the short of it from his social media post here. I think it's going to take a very, very long time for that to happen, if ever. I think the days of free money are over. Why is that? The economy is moving into a more productive phase. It's one of the reasons the indices are at new highs driven by AI. I think the economy is stronger than people think. I think the tariff issues will be gone by the end of the year and that we settle into a 10 to 15% range. I'm very bullish on what's going to happen in productivity, and I just don't see interest rates in the U.S., the world's strongest economy, being dropped dramatically. So when you look at this here, he talks about tariffs coming in at 10 to 15%, which would be a pretty normal tariff range once this trade war's over with, that the 7% has been historically the standard mortgage rate for about 4 decades, even in periods where rates reached double digits. Now, we're coming off a very spoiled time frame where we saw some of the lowest rates ever recorded in history. So that's a really good point. The 3.5 to 3.75% mortgage rate was an anomaly, partly induced by a global pandemic. And anyone who locked in a long-term mortgage at those levels, you're fortunate, you're lucky, right? And I think that's the main thing to say to a lot of people. That chapter's likely closed. So Kevin O'Leary had some pretty clear advice for buyers. There's really 2 outcomes. So one outcome here for buyers is to adjust expectations. You might need to think about buying a smaller home, buying a home that costs less, moving to some other neighborhoods where you get more bang for your buck, because we can't control mortgage rates. Buyers are adjusting to them, especially the ones that are transacting. It doesn't mean you don't want a home. The way you adjust is buy a smaller home, buy a home in a different location, buy a home with less features, buy a different type of home. And it's not really that difficult. The hard part is coming to that realization on your own. And there's a basic rule of financial health that he outlined, that no more than 1/3 of your after-tax free cash flow should go towards a mortgage. Now, I know a lot of lenders, they're going to pre-approve you up to 50% of your debt-to-income ratio. Just because you can qualify for it and afford it doesn't mean you should do it. This is personal financial planning. So that's something really to think about. Coming up with a budget, calculating this based on combined incomes for couples or whoever's in your household. It's a really a great way to look at this. We can't control rates. We can control what we're buying. Now, the problem is a lot of buyers break this rule. They stretch to 50 or even 60% of their income to afford a nicer home, and that can leave you vulnerable when it comes to financial planning. So that's one thing. Now, the other outcome here is that you're going to be disappointed. And when I say you're going to be disappointed, because rates aren't going to come back down, I'm pretty clear on that we're in the norm here. And everyone's hoping with what the Federal Reserve's talking about with 2 more rate cuts before the end of the year, that's already been priced into the pricing on mortgages now, because the investors are smarter than the Fed. So, if you're holding out for these rates and you're not adjusting your expectations, that's not even the worst of it. It could cost you an opportunity to buy a home that's going to work for you, that you could live in for the next 5 years, and the payment works for you. You might miss that opportunity altogether by playing the waiting game. And this may be harsh advice for some people. This is real advice. This is what we advise people with, so you can take the facts and make a good personal financial decision. So if you look at what happened in 2020 versus 2021, and history provides a lot of great insight into these types of decisions. Well, if you were an early mover in 2020, you bought right after the market opened up, when things started to change, they got out of their house in May and scored a deal. Those buyers did really well. They not only got a low rate, they got a low price on the house. Look what happened to the buyers who waited until 2021 because they were nervous or they weren't sure or they didn't take action. Well, they did great on the rate, but they paid a much higher price, in some cases 10, 12, 13% more than what people were paying just a year ago for the same type of home. Early movers win, and the early movers in the market right now are in control of the negotiating, meaning if you've got a need to move, and I'm going to give you again the magic formula here. We've talked about this before. You can live in the home the next 5 years. The price and more importantly, the monthly payment fit your budget and the home works for you, at least 70% of it does, then you just found the right property to purchase. That's the expectation you want to adjust. And it's exactly what we're talking about with Kevin O'Leary's advice here. The era of ultra low mortgage rates, it's gone and it's not coming back. And if you continue to wait and hope's not a strategy, my friends. So we can help you find homes. We're getting buyers, properties, right. Incentives with inspections, with negotiating that's happening. You're able to transact right now in the fourth quarter because a lot of people are seeing, hey, I'm going to wait until next year. I'm going to wait until the spring. And even if these rates tick down a little bit and they hit 6%, that's going to bring a whole lot of people back to the market and prices will go back up. So don't take my advice. Take the Shark's advice. Take Kevin O'Leary's advice. He knows what he's talking about. He's been through many market cycles, and adjusting expectations or just accepting the fact you might get disappointed. Those are really the outcomes here because the facts and the data don't lie, and that's where everything's going.